Good morning. Good morning. Good morning. Good morning. Hi, everybody. Welcome to the program this morning. It's your buddy Uncle Bruce here, saying hi to you from the lovely area known as Rancho Mirage, California. It's 5:31 here in California. It's 8:31 in New York. Welcome all of you to another day of fun. I can't tell you from day to day what the market is going to do right now because we are in an era of complete unpredictability from Washington. Let's face it, we have no idea what's going to happen. We don't know today or tomorrow or next week will we be influenced by a policy decision out of the White House, a Supreme Court ruling out of the Supreme Court, a proposed bill out of the Congress, a geopolitical event somewhere on the planet, statistics for unemployment, inflation, interest rates from whatever bank. We don't know. We just don't know. And so we're completely playing by the seat of our pants every day what the heck is going on in the stock market and what's going to happen in the stock market. And we will see daily shifts during the day as well. There are going to be days coming up where we might be down 400 points to open the day and end up with a gain of 400 points at the end of the day, because we don't know who's going to change their minds on this or that, or impose this or impose that. We might be up 400 points to start the morning and be down 400 at the end of the day. There is no rhyme or reason coming forward to this market. And I cannot emphasize enough to all of you who follow me on a regular basis that you should be getting the hell out of the stock market. You should be getting out of stocks completely. Shift into a cash mode only and start writing options using your cash. That is the key to success, because right now we're going into the yo-yo mode, and I'm worried that we're going to go down for 2 days and up for 1 day and down for 2 and up for 1 day. And going into a week or two or a month from now, we have 3 days of losses, 4 days of gains, but the gains don't get the losses back. And then we have 3 more days of losses and 2 days of gains, and we don't get the losses back. And we have this from way up here to way down there, this continual drip of the markets. That's what I'm wondering if that's going to happen, because right now, cash is becoming king. You're going to start seeing little things here and there. You're going to start to notice very big headlines. You're going to see headlines every once in a while that will surprise you, and it'll be something like it's just a generic idea. So and such house in New York, like a penthouse, whatever, price drop of $10 million. Or so-and-so's house, a Hollywood actor that once owned a house in the Hamptons, price cut of 10% on the house, or 20%. You're going to see on Zillow, Zillow.com, that real estate thing, you can watch your neighborhood. This is for Americans. If you're an American, Zillow.com is great because you see what houses are selling for in your neighborhood, and you don't have to talk to a realtor about it. You could do it with your own little mouse, and you can scan your neighborhood or where it is you'd like to maybe move to, or you're a guy like me and you're curious about real estate around here. Anonymously, you can follow real estate. You're noticing already, I'm sure, depending on where you live, price cuts. You're noticing, oh, the house was listed 2 months ago. Oh, there's a price cut on the house just last week. It might have been like a $480,000 listing, and there's a $15,000 price cut. Or you've noticed a house that was $875,000, there's a $50,000 price cut. You're going to notice this everywhere. Cash is becoming the king of the heap, which means items are going to drop in price everywhere and be made cheaper to those who have the cash to buy it, which means those of you who have cash, your standard of living is going to go higher. Those of you who own stuff, your standard of living is going to go lower because stuff isn't going to be worth as much cash as it was in a hot economy. And that is what I'm wondering about is going on. The bond market, the worldwide bond market, which is the biggest market on the planet. Most of the world's money, when you take the entire value of the world, is in bonds. Smaller amount is in equities. Those are stocks. Options gamble on stocks. Okay, options fluctuate on values of stocks. The bond market is all government debt, all city debt, state debt, all corporate debt, and all personal debt. All the money you owe on a mortgage, on your credit card, line of credit, your student loans, whatever you owe money on, your car loan, whatever, it's all been bundled in various formats into bonds that trade in the bond market. And bonds issued by the government of the United States will pay around 4% interest. Bonds issued by the Japanese government pay 1.25% right now. Bonds in Germany pay 2 something. Bonds issued by banks that carry huge credit card balances for American Express, MasterCard, Visa, any of these bonds issued by private, by hedge funds and all kinds of other investment bankers, they pay a higher interest rate because the American government is a better, safer bet to lend money to than to you or me on our credit card balances. As good as we are and as wonderful as we pay our balances, there are those among us that we know who are behind in their credit card payments or can only make the minimum payments and can't even pay down their principal, which means bonds issued to cover credit card transactions, of which there are trillions of dollars out there, they yield higher rates. Now, the good news is bonds of credit card holders cover millions of credit card balances, not one person's credit card balance. And so these bonds are generally pretty secure, but they do have a default rate built into them, and that's why there's a higher yield. So if they pay 12% to the investor of interest, 1 or 2% of that 12% is for defaults. It's all built in, and it's called insurance. In any event, the bond market last evening, while Americans and Canadians were sleeping at home or tossing and turning in our beds, wondering what was going to happen today, the bond market was sinking globally on all bonds, not just a government bond. All bonds are under pressure right now, which means that yields, the cost of interest, has gone up overnight everywhere, making cash more valuable. Why? Because if you have money in your account at your broker, through your online broker, you listened to me and said, this guy, as bald as he is and as white as his hair is, what he's got left of it, I believe this guy. I'm selling my stock, you said, months ago and days ago. You've been selling off your shares and you've started to listen to me and gone, I'm going to write cash secured puts on the very stock I used to own. I own NVIDIA. I'm willing to buy NVIDIA back at $100 a share. I'm going to write a cash secured put. I'm going to sell my NVIDIA shares, write a cash secured put on NVIDIA, and be willing to buy it back at $100 until next January. Give me $12 a share in cash. So my net price to buy that stock is $88. That is the gamble I'm willing to make with my options, that I'll buy a Tesla, I'll buy NVIDIA back, or Tesla or Microsoft or Apple, whichever one you want, at a lower price than it's trading at. And maybe it's 20% lower than what it's trading at. I'm prepared to buy NVIDIA back for 20% less than it's trading at right now. Even though it was $140 a share just last week, it's now $117 or something like that this week, $115 this week, whatever it's doing, I'm willing to pay $88 for it. Tomorrow, you might say, oh, if I'm going to write a cash secured put now on NVIDIA, I only want to pay $83 for it, or $78. I'm going to write a $90 cash secured put and take a $12 premium for that. Good till next January. And I'm on the hook to buy this stock for $78. That's the confidence I have, making you cash rich, because if you sold the stock Now, whatever's trading at 115, whatever, and you turned around 113.34. You turn around and wrote a $90 cash secured put, which puts you on the hook to buy the stock around 79, 80 bucks. You're earning interest on the money that you've been sitting on. And that's the key right there. You're going to earn interest on cash balances, which I call a monthly dividend to you. It's your monthly dividend. There are people out there who've been holding IBM stock for years and years and years, and they've been selling the IBM stock, turning around and writing an IBM cash secured put to buy the stock back 20% lower than it's trading at, net, and they're getting monthly interest of 4.5–5% just on Treasury ETFs. If you go into corporate ETFs, you can get up to 7–8% interest. Just shop around. And they're thinking to themselves, if I own the IBM stock, I get 2.5% return in dividends. Once every 3 months, I get a check, which is deposited right into my account, and I can do what I want with it. It's 2.5% a year. I can get 5% a year, double that, by just selling the stock and getting interest on the money. Why don't I buy a cash secured put to buy this thing back at a discount, get the cash for that put, and earn interest on that as well? What's wrong with this picture? There's nothing wrong with this picture. Everything is right with this picture. And if rates are going to go higher, interest rates are going higher, and they will, you'll get even more money on your money. Cash is king. The automotive dealers out there, your dealership at your local hometown, the automotive manufacturers globally, I'm not talking about North America only, I'm not picking on Ford or GM, all manufacturers of vehicles are crapping their pants right now because they're worried that the vehicles that they make on the factory floor this week and next month may not sell as well as they have been because interest rates are going higher to finance the car, because very few people have cash to buy a car. And there might be price increases put on these vehicles due to tariff restrictions on components of these cars. A car is not one thing. A car is an amalgamation of thousands of parts, wires and screws and clamps and foam and springs and engines and transmissions and dashboards, and zillions of parts are used and raw materials are used globally to make a car. We take it for granted that cars come off the assembly line every 30 seconds, another one comes off the line, or whatever the production rate is. We are oblivious to the reality of how cars are made because we're older and we're fat and we're lazy, because all of our lives, whether you're 35, 69 like me or older, we're now spoiled. We're first worlders that are spoiled, that everything's just great and everything just happens miraculously. This thing, we don't even consider how complicated this thing is. We don't consider what went into figuring out how to make this, design it, how it runs so dependably most of the time. We just take for granted that this miniature computer can give us anything we want to know in an instant. We just take it for granted. At the end of the day, car manufacturers, which is old school, I mean, cars have been made since the early 1900s, these guys are crapping themselves in head offices around the world because they're worried that in the next 30 to 90 days to 180 days and a year from now, they don't know what their cars are going to go for on the lot. Because by the time the car gets onto a dealer's lot and goes through all the borders it has to cross and all the tariffs it has to be worried about and the financing that has to happen when it gets to the showroom floor, no one in the automobile business can tell you what an F-150 is going to be retailing for 6 months from now, or a Mercedes is going to retail for, or a Beamer or a Tesla. They don't know. They have their own internal costs. Yeah, sure. Those are changing. It used to be that, suspension systems were this much money. No, the suspension manufacturer is saying, we're suffering tariff problems here. Half the parts for this suspension system are coming in from here. They're all subject to tariffs now. They're not exempt under the automotive thing. we have to raise our prices to you. This is what's going on in the market, in the corporate offices of automotive companies, and the corporate offices of appliance manufacturers, corporate offices of television sellers, computer manufacturers, furniture makers, anyone, everyone, everywhere. And then there are the average people, the average Joe and Debbie out there who do not know, how much will I pay for a dozen eggs today or next week or next month? I don't know what the prices are going to be. Every time I walk into the grocery store, I have no idea what I'm going to pay today. Or avocado is going to be 30% more expensive this week than last week because there's tariffs on Mexico. Or is something from Canada going to cost me more? I didn't even know what I used to buy over there was made somewhere else. I had no idea that what I have in my fridge comes from all over the world because I don't read the labels. I just know that I like to buy this product, and eat it. I didn't think about where it came from because it was just so damn convenient. All of a sudden, the rules have changed. The entire game has changed. And so many of you out there, people you know, who are working for a living, are finding that they are losing in their standard of living. They're working as hard as they've ever worked before. They're better at their job than they were ever before. They are being praised by their employers for their tremendous efforts. Corporations and administrative offices across the world are far more efficient. Head offices are run by people, fewer people now than ever before, and yet they can do more stuff because we use the latest technology to upgrade software in our systems. We have far more efficient people. Some people work from home, some people come to the office. Businesses have hired consultants instead of employees in-house because consultants are leading the cutting edge change. And now we have AI coming. We have AI coming, which is, in the end of the day, a job killer. AI is the next phase of efficiency improvements across every business around the world to make them more profitable by cutting their costs. Now, AI, theoretically, is maybe supposed to help marketing departments be better marketers, copywriters be better copywriters, although copywriters will say, really? You really think you can outsmart me? AI is supposed to replace or supposed to improve the shipping and receiving department, the warehouse operators of the world, the shippers of the world, airlines, railroads, cruise ship operators, hotels. Every aspect of our lives will be affected by AI in one respect or another. Some not very well, some incredibly well. And at the end of the day, businesses as a whole should expect to be more efficient than they are now to generate more money with less cost. Just got really windy out there. The question is, if you have everyone cutting back on employees because AI is becoming more of a dominant thing, doesn't that mean fewer people are making money and now being able to spend money? After all, we're not talking about getting rid of the janitor in the hallway. The floor has to be mopped up. And yeah, you can hire a janitor that can push an automated machine to clean the floors, but somebody still has to bend over and get the garbage can and fill the bag with garbage and dump it out. And then you still need the guy with the truck to pick it up and take it away, and you got the landfill. I mean, there's the basics, okay? We're not getting rid of those guys. We're not getting rid of the window washer on the outside of a building. You might think that it's all going to be automated with robots. Think again. No, who's getting replaced in the office because of AI? There's a certain level of management now. They're not after the low-end employees. They've already annihilated those people with robotics and sorting systems and what have you. No, that's done. Take a look at the baggage department of any airport. Take a look at the FedEx handling of packages. The number of people that run in FedEx now compared to the 1970s when FedEx first started, it's no comparison. Way fewer people per package. No, it's the management level. It's the white collar folks. These are the ones that are now subject to elimination. They're going to be annihilated. They're going to be reduced first by 5 or 10%, which is just attrition. So it's an invisible parting of the ways. Charlie retired and we're not replacing him. Betty retired, we're not replacing her. Every 10 people that retire, we only bring in one newbie. That's the easy way to do it. No one notices it. But then you have entire departments get laid off because the company has decided to hire out a consulting company to replace this department of our company and that department of that company and so on. And now you will see massive letting go of people who now cannot get replacement jobs. They can't go back into another company that has 1,000 employees from the one they just left, because that company also is replacing people with AI. What does that mean now? If you're 35, 45, 50 years old, you have to now find work on your own. And maybe you can find work as a consultant to small and mid-sized companies as a private independent business operator. In other words, you've just become a consultant yourself, and you're going to use AI to help you be a better deliverer of services. But in 15 years ago, you would have hired 5 people to work with you. Now you're only hiring 1 person to work with you. And the 2-man team that you've created through your consulting practice and the AI that you've picked up that you're going to now use on a leasing basis, monthly basis, makes you a 5-man organization. And if you're smart enough to do that and you're entrepreneurial enough to do that, you'll survive. But if you're not, you're going to downgrade now. You're going to be finding people. You will hear about coworkers and friends and relatives. Yeah, too bad about Bill. He lost his job, that $180,000 a year job that he had with all those benefits. He is now working. A friend of his is a golf pro at the country club that he used to belong to. He's now working in the pro shop with his buddy, and he's making $50,000 a year. Gets all the golf he wants, but he's making $50,000 a year because he is not entrepreneurial. He cannot create his own company. He doesn't have the mind of that. You're going to hear all kinds of horror stories from university educated, holding degree people who cannot get rehired because once you hit a certain age, you're out. You're just too damn expensive to bring in, and you're too much of a problem because you're too smart for us. You're going to ask too many questions, and you're not just going to do what you're told. You're going to buck up and say, why should I do that? Isn't that so-and-so's job? Where the youngster coming out of school will do anything to get the job and will work extra hours to hold on to it because the first year you're on probation. So for the first year of probation, they'll do anything. Whereas this 52-year-old on probation, that's not scaring this person. And they can only give so much because they don't have the energy of a 32-year-old, and they've got other things. They just came from a really cushy job, and they're not going to go to do this kind of work. And we don't have to pay them $180,000 a year. We can get this guy for $80,000 a year, and yet at $80,000 a year is not worth it. We're better off hiring the inexperienced 35-year-old that'll work for $65,000 a year on probation. And in the second year, we'll pay them $72,000 a year by giving them a 10% raise, and they'll feel like they've just won the world. And we're still saving $108,000 a year in the second year. And in the third year, they'll get to $80,000. In the fourth year, they'll get to $90,000. We're saving hundreds of thousands of dollars for each of these people we get rid of. Corporations will go, yeah, we'll do that. Let's get rid of 500 of these guys. In our company, we can get rid of 50 of them. Let's get rid of them right now. We've just saved $30 million of expenses in the next 5 years for our corporation, all going to profits, or allowing us to do less business and make more money. Because we may lose business because we lose some of these people, but in the end, we've cut our costs more than what we're losing on the top end. And so we win anyway. We're winning by getting smaller. Welcome to the world that's coming our way. This evening, the bond market went, oops, we don't like what we see. The White House is unpredictable. We don't know what this guy's going to do next. We've got all kinds of our forecasters, all kinds of consultants we've hired, and they can't give us an answer as to what is going to happen next week and next month and next year. Because right now, until the midterms, all bets are off as to what the hell's going on over there in the United States. And better to be safe than sorry. So why don't we lay off people? Why don't we delay an expansion? Why don't we postpone the business of this, or why don't we take this business we were going to create, this division that we were going to really move into, why don't we create that in France instead, or in Germany, or in England, or in Brazil, or in Argentina, or in wherever? I don't know. The companies around the world have to think about their worldly, for their good. And if they feel that they're not welcome in the United States or in Canada, or they feel that being in Canada and the US and being centric, really, we want to build our business in North America, it's just not predictable right now, we'll delay it. We'll come into America later when we really know the rules. And let's see what our competition does in the meantime. Now, let's see what company number one is doing over there, and see if they're going to lose $20 billion on the investment of a data center in Cincinnati. I don't know, whatever. There are a lot of businesses watching a lot of other businesses and are wondering what government wants us in town and which government doesn't. What countries consider us to be an ally of theirs, good for their country, and what countries look at us as the enemy. And it's as simple as that. And that is what's going on. It started last night in the bond market. For those of you who are sitting on cash, you've got out of the market. You're now writing options, cash ticket puts, credit spreads, whatever. You're writing call options in your 401ks, your RSPs. You are writing call options. They are dropping in value with the stocks. You buy those call options back and write more call options. You just keep writing. You keep doing that. That's exactly what you're supposed to be doing. But for those of you who are sitting on mountains of cash that you've never had before, that shocks you, even now, you look at your account and go, I can't believe I got 180 grand in there. I used to have 80 grand worth of some stocks and ETFs, and Bruce was showing me how to write options and stuff, and I was doing this and that and this and that, and then I just sold it all and started writing cash secured puts and writing more cash secured puts, and now I'm writing credit spreads on top of that. I got a mountain of money here. I'm earning interest on this money. I never thought interest every month would be a factor in my life. I kind of like getting this kind of money. Some of you out there are looking at the kind of money you're bringing in and going, I can't believe how much this is. And this is why today I'm asking a very simple question for my question of the day. I want to know, those of you who have gone into cash and you're earning interest, how much interest have you made in the last 6 months for your account? Have you been making $100 to $1,000 so far in the last 6 months? 71% of you are saying, I'm getting at least that much in the last 6 months, Bruce. What about 1,000 to 5,000? Are any of you making between 1,000 and 5,000 in total interest on your balances in the last 6 months? 22%, 1 in 5. You've brought in up to 5 grand in the last 6 months in interest. Where did this come from? You never got this in the past. 5 to 10 grand, 4%. Over 10,000, so far 3% of you are doing that. Answer the question and let me know your thoughts, no matter how small or large it is. So far, 94 of you responded. We'll give this another couple hours to see what the reaction is. Thank you all for the thumbs ups today, 72 of them. I appreciate it. And Bobby Atkinson, thank you for letting the world know that you've been a member of this channel for 36 months. Man, that's it's incredible how time flies, isn't it? In 10 days from today, it'll be the 16th of March. That will be the 4th anniversary of when I launched memberships for this channel. It was March 16th, 2021, that I announced memberships are available for this channel. And why did we do that? Because at the time, I had 106,000 subscribers. I was talking to 2,000 to 4,000 to 6,000 people at a time. What was happening at that point? We were inundated over here on the chat box with trolls. We're being just hit with troll after troll with ridiculously amateurish and childish comments that had no business being acknowledged. And many of you were blocking and blocking and blocking all kinds of other viewers so you didn't get that nonsense on your screen. And I decided enough is enough. I want to talk to people who are serious about making money in this market. I don't need to talk to children and amateurs and people who have nothing else to do but to troll live shows. And so I created the membership system, which was chilling with Uncle Bruce, $10 a month, become a member. And that meant you now had to pay to comment during trading time. What a difference did that make? The first difference it made is that from that day forward, after the 17th and 18th of March, every day until now, even now, I still lose subscribers. We're now down to 80-something thousand subscribers from 106. 26,000 have left. I will bet you dollars to donuts that 25,000 plus of those people who've left this channel were never going to be option writers. We're only looking for hot stock picks that would make them into millionaires. And they've gone to many other channels on YouTube. The problem, of course, for some of these folks is that they were watching a number of guys like me. Some were in their 20s and their 30s and whatnot, and they were telling you to buy this or that or whatever because they were really promoting certain stocks. Some of those guys, not all, but some of those guys, didn't last much longer than past March of that year. They were gone before the end of 2021 was done because it became evident to law enforcement at the SEC that there were pump and dump guys running channels on YouTube to try to convince people to buy their stocks that they were promoting. They were being paid to promote stocks. I was approached time and time again, and I still get approached by organizations that want me to promote companies on their behalf. And they're prepared to pay me to talk to you about how great this company is, this company is, this company. And I don't do that. I'm not sponsored by anybody. The SEC has put legal action against a whole bunch of guys, and I have no idea what's going to happen to them. But we let go, or I let go, a huge number of subscribers that were simply here to get the hot tip of the day. I have now about 83,400 and I'll tell you right now, 83,462 current subscribers on this channel. And in the last 28 days, I've lost 205 subscribers just in the last 28 days. Even though those of you who are here every day and who are here often, you may not be here every single day, but you're here every week and you're watching me from time to time. You've taken my classes. A number of you had one-on-ones with me, and you've become option writers. And 99+% of you who are option writers and are really buying into the conservative nature of option writing have made money. They have made money and made money and made money on the option writing. Even with that track record, I am still losing subscribers because there are some in that 80,000 number that haven't watched me in a year or two. And they were never going to be option writers, but they have just not gotten around to canceling their membership or their subscription, because it's free to subscribe and it's free to go away and it's free to come in. It's been fascinating. By the end of 2021, beginning 2022, I launched this level of membership, the Gold Bagel level membership, which is $25 a month. And for that, you get a lot more than just being a Chillin' with Uncle Bruce member. And it took a year and a half, but in a year and a half, as members kept coming and rolling over and so on, we had an initial surge of members, and then that backed off and it leveled off. And now the shift started. People got out of Chilling membership and got into Gold level membership. There are now more Gold Bagel members than regular members, and it's almost 2 to 1. It's a big chunk of you, because Gold Bagel membership gives you more than just being able to comment here during the live shows once we kick it over. And I, of course, every day I attempt, like Zelensky, I try to say thank you to all of you who are members of this channel. I do the best I can. I wear black. I need to get one of these logos that Ukraine has. And then I'll imitate Zelensky and say, thank you, everyone, for being a member of this channel. Some people will say to me, oh, you forgot to say thank you 3 days ago, you son of a bitch. How dare you come into my office not wearing a suit? But I'll have to deal with that. It's regrettable, but I'll do the best I can. Thank you all for supporting this channel. Thank you for hanging around. We're down 410 points on the Dow Jones in the pre-market. Been down here almost all morning. We're down 74 on the S&P. We're down 340 on the NASDAQ right at this moment. So the Dow is down just about 1%. The S&P is down 1.25%, and the NASDAQ is down 1 2/3%. So it's the NASDAQ stocks getting hit, the Magnificent Sevens. Crude oil is up 24 cents. I want to show you something else. I want to tell you something else. I want to show it to you. I'll tell you. If you're listening to me, listen very closely to what I'm about to say. Okay. Back on January the 28th, which right now is approximately 36 days ago, just about 36 days ago, okay, 5 weeks, let's say. Back at that time, I mentioned to you folks what the price earnings multiple was of the Magnificent Seven stocks out there, plus SoFi. I mentioned at that time that the PE multiple of Meta, Facebook, was 28.3. The PE multiple of Meta was 28.3. Now, since that time to now, Meta has released their financials, their latest quarterly financials. Their shares have fluctuated in price, and the PE multiple has changed. This isn't uncommon. This is quite normal. Every quarter this happens. But the Meta PE multiple used to be 28.3. So the stock used to trade at 28.3 times per share earnings. They're now down to 27.5. Not much of a change on Facebook, but the stock has adjusted in the last little while. If I pop up my quotes here, and I pop into Meta right now very quickly, just bear with me here. The Meta shares are right now at $649.79. They're down $6 in the pre-market. The stock in the last, let's say 3 months here, back in December was around 585, December 31, and by January the 6th, it was 630. By 17th of January, it was 612. By the 28th of January, which is where this PE multiple came from, the stock was $674, and then it ran up to $740 right around the 14th of February. That's only about 3 weeks ago. From 736, we're at 650 right now, and the PE multiple is lower than the 28.3, but it's still at 27.5. Quite an interesting change. Now, if we take a look at another one of our Magnificent Sevens, what about Microsoft, MSFT? Microsoft, the stock was trading on a multiple basis of 35.6. 35.6 back on the 28th of January. And the shares around the 28th of January were trading around $447. They're today trading at $395, so they're down just about $50. And the PE multiple went from 35.6 to 32.4. And so the PE multiple of Microsoft has dropped. They did come out with their financials, and they were pretty good. But again, future results are what everyone is worried about going forward. Let's talk Apple. Our friends at Apple Incorporated. They were trading at 39.4 back on January the 28th. And if we now take a look at what the stock was at on January 28th, they were at 238. Today, they're at 234. Funny. 5 weeks later, the stock's only $4 lower. But the PE multiple is 37.5. It's gone down from 39.5 to 37.5 because earnings came out and they made money. They had a very good profit. Of course, the big question is, can they keep it up? Now, NVIDIA. Let's talk about NVIDIA. That's one of the big dogs out there. Back on January the 28th, NVIDIA. What was it trading at, Bruce? Well, I'll tell you. Here we go. There we are. 129. We're trading at 129, and the stock was at 48.7 earnings. But their earnings came out just last week, remember? Came out very good. Their PE multiple went from 48.7 to 39.9, and the stock has gone down from 129 to 113. So the stock has dropped $16, and their PE multiple has gone from 48.7 to 39.9. That is one of the lowest PE multiples for NVIDIA in quite some time. Fascinating to see this. Google. Our friends at Google. We have friends everywhere. Let's take a look at Google. Google. Right there. Alphabet. There we have it. Back on the 28th of January, just 5 weeks ago. I mean, this is just back then. We were at 197 a share, trading at 26.2 times earnings, which wasn't, as outrageous as the others. We're now down to 21.8 times earnings, and we're trading at 172.94. We've dropped $25 a share on Google to 172.90. We're off $2 this morning, and the PE multiple has gone down from 26.2 to 21.8. That is significant. That makes it one of the better values of the Magnificent Seven. Let's talk Amazon. That's another Magnificent Seven stock. Amazon. Take a peek here for January the 28th. Jan 28. We were trading at, here it is, $238.15. $238.15. We were at 50 times earnings then, Jan 28th. We're now down to 204, so we've given up $34 a share, which is 15% practically. And the PE multiple is 37.7. This is one of the lowest PE multiples ever recorded for Amazon. It's not like the stock has lost 50% of its value. It's lost 15 to 204.45, but the PE multiple went from 50.7 to 37.7. Incredibly significant move. Tesla. Let's take a look at the other one here. Magnificent Seven player. Tesla Incorporated. Here we go. On January the 28th, Tesla. Here we are. Just follow there. There we go. $398 a share. The stock was trading at 192.6 times earnings, 192 PE multiple. The stock is now a 136 PE multiple, and it's not trading at 398, it's trading at 271. This has been a significant hit on the stock. Fascinating. And let's talk about our favorite stock of all time. Around these parts, we love to talk about SoFi. And why not? SoFi has been good to us in the last year. 601 52-week low, 1842 52-week high. January the 28th, SoFi was trading at 1617. And the PE multiple at that time was 43.3. The PE multiple now for SoFi is 34.4, and it's traded from 1617, and now it's 1307. So it's about $3.10 lower, which is almost 20%, 19% lower from the 28th. And the PE multiple has gone from 43.3 to 34.4. A massive pullback in PE multiple on SoFi, which tells me, as an observer of markets and an old man with experience, decades of experience, stocks with lower PE multiples have a much higher potential to go up in price. That's usually how it works. If you have a company that makes money, can grow its earnings, and they trade at a low PE multiple relative to their contemporaries or the market as a whole, they have a chance to improve first. they have a much better chance to improve in value than other companies. Companies that are losing market share, losing sales, having worse margins. These companies are falling, but their PE multiples stay high. Why? Because they're not delivering earnings to the bottom line like they used to. They're generating lower earnings to the bottom line, which means no matter how many shares are out there, if you can buy back all you want, but with only a 5% allowable per calendar year for a company to buy back its own stock, there are companies out there buying back their own stock and their PE multiples are still rising. In the Magnificent Seven, in some of these cases here, and including SoFi, what we have is a number of these companies are growing their sales, growing their net earnings. And in some cases, in the Magnificent Seven, they're buying back their stock. NVIDIA is one of them, Apple's another. And by buying back stock and earning higher sales and earning higher net profits, dividing it into fewer numbers of shares, what we have here are higher earnings coming in per share. And with the stocks having dropped in price in the last few weeks, 5 weeks to be exact, every stock I talked to you about is lower. Every one of these stocks is trading lower than 5 weeks ago. Their PE multiples have gone down. Some are notable for how much they've gone down. And I come back to Google as a classic example. Google was only at 26 times earnings. It wasn't like ridiculously overpriced. The S&P was at around 22, 23, and Google's at 26. Now Google's at 21. I'll bet you that Google is now at the S&P 500 average. That's the first time in a long time we've seen that. The Amazon shares from 50 times PE multiple to 37 times PE multiple. That is a major significant move down in PE multiple. The stock's down, I know, but the PE multiple is really backing off, becoming much more respectable for the history of Amazon, Amazon's overall history. Tesla was ridiculous at 192. It's ridiculous at 137. But note, that is a 1/3 backing off of PE multiples on Tesla. But Tesla has its issues. We all know that. Meta going from 28 to 27, not much. Microsoft from 35 to 32, interesting. Apple 39 to 37, very interesting. And NVIDIA from 48.7 to 39.9, that is significant. Because the thinking in the world for NVIDIA is that the quarter they're into now, this is March the 6th, in 3 weeks the quarter is over for everyone in the first quarter. Meta's first quarter should be even better than last year's first quarter. And so the thinking out there has got to be Meta in a month and a half, in 3 months from now, when they release their latest results, 2.5 months from now, they'll come out and say, here's what we did for the first quarter. The thinking has got to be right now that they're not trading at 39.9 earnings multiple for the end of the quarter coming up. They might be down to 35 times earnings, 33 times earnings. And so the thinking has to be by guessers, the gamblers, that while maybe the PE multiple will stay at 40, but if the earnings go up with this next quarter coming out, which again should be 2.5 months before we get the results, 2 months and 3 weeks, because we just got the results last week. Every 3 months they report, so we're almost 3 months away from the next report. But in that time frame, if the shares drop any further and they can hold a 40 PE multiple when the report comes out in 3 months, doesn't that mean that the shares of NVIDIA could be back to 130, 35? Maybe they'll be back up to 135, maybe 140, and they'll be trading at only 35 to 40 times PE multiple compared to the 48 they were trading at 6 weeks ago. Keep that in mind. Are we going back to 48 times earnings on NVIDIA? Is that really going to happen between now and 3 months from now? Is the euphoria of the market going to come back, and all the positive news that we are looking for from Washington and everywhere else going to affect NVIDIA, so the shares of NVIDIA will pop up to a level so that we traded 48 times earnings on these increased earnings from the fourth quarter to the first quarter coming up right now, that could take us to $180 to $200 a share, say the experts. Make you wonder, doesn't it? SoFi, 43.3 times earnings 5 weeks ago, 6 weeks ago. We're now at 34.4. In 3 weeks, roughly 3.5 weeks from now, it's the end of the first quarter for SoFi. And a month after that, they will come out with their financials for the first quarter. They themselves have said, out and out predicted, they were growing their memberships dramatically. They were going to bring in additional capital, sales. They were going to increase their net bottom line profits. The question is, were they sandbagging us? Were they saying, yeah, we're going to increase our profits by this much when it's actually going to be by this much? And the question then is, the shares weren't at $18 5 weeks ago. They were at $16. And they were trading at 43 times earnings at 16. Now they're at 34 times earnings at $13. Are they going to go back to 40 times earnings based on the upcoming results that should be even better? Think about this. They have to replace last year's first quarter with this year's first quarter. Could it be that the company comes out and says, yeah, we made more money in the first quarter of 2025 than we did in the first quarter of 2024. And we're upping our guidance for the second quarter, third quarter, and fourth quarter of 2025 because, again, the trend is there. Could it be that the shares rally and trade at 40 times earnings, much higher earnings, and that puts the stock into the 22 to 25, 27 neighborhood? Is that the net result? And if that is the net result, that the shares will reach 22 to 27, doesn't that mean then that the company's market cap is $25 billion? And doesn't that put them $7 billion over the market cap number they need to be included in the S&P 500? Wouldn't that then mean they'll likely be included in the S&P 500 later this year? Questions we ask all the time. And so there you go. I wanted to just tell you about the PE multiple adjustments that have happened with just these stocks, because the Magnificent Seven dominate the market, and I wanted you to understand this. It's a fascinating thing to follow. We'll see how this all plays out. We open in 6 minutes. Welcome everyone to the program. Thank you for joining me today. I hope you don't mind the old man ranting away and speculating on what could happen in this market. It has been a lousy pre-market for the most part today. We are still showing a 350-point drop on the Dow. We were as bad as 440, I think, at one point, but it's still around 350, 0.8% for the Dow. S&P is down 1.1% at 65% loss, 65-point loss, and NASDAQ showing a 1.47% loss. That's about 305 points. Gold is off to 890. Crude oil is at $66.67. Down is up 35 cents at the moment for crude oil. As far as the VIX is concerned, it's going the wrong direction. The VIX is at 2356, and we were at 15 on the VIX just a few days ago, and now we're at 2360. So that's not good. That's ungood. Anyway, that shows me that we have a negative market, and we might have a negative market for a good part of the day today, unless something positive breaks somewhere. And I'm not sure where it'll come from. I really don't know. I worry more about downside announcements rather than upside announcements. The Rocket Lab shares, they've been all over the map here lately. We were down into the 1940 level. We're now at 1980, still down 60 cents on the session. I don't see anything wrong with Rocket Lab anywhere. I just have a feeling that the investors out there are getting so sideswiped with daily swings and gyrations that some folks out there are getting margin calls from their brokerage firms because they're way over leveraged into maybe NVIDIA or maybe other Magnificent Seven stocks, and or other growth stocks that they borrowed against, and some were borrowing against their Rocket Lab in the 30s, and they got their butts handed to them by their broker, and they've had to reduce their position on Rocket Lab. And so for a short period of time, Rocket Lab is under pressure because people had to sell it that didn't want to sell it. And the question is, when we run out of stock in these levels, the stock could pop to 25 to 28 bucks. The question is that today? Is that tomorrow? Or is that a month from now? Like, when does that happen? And that's the frustrating part for Rocket Lab credit spread players. But cash secured put writers for Rocket Lab have no trouble here to write $20 to $25 to $30 cash secured puts all the way to January 26 and grab gobs of money from the gamblers who are trying to play the option side of it. There's some money in them there hills. Anyway, we're 1979 down 61 cents. Over on SoFi, as much as I talk it up, it's off 45 cents this morning to 12.98 at the moment. The day yesterday went up 34 cents. And yesterday, Rocket Lab, by the way, was up $1.40. The Rocket Lab is down 60 cents, but it was up 140 yesterday. SoFi was up 34. It's down 45. So it's actually down more than it gained yesterday. But this, again, is 3 minutes before we open. We'll find out in a few minutes if this is real or not. Trading at 13 now on SoFi. GameStop down 35 cents, gained 77 yesterday. 23andMe is sitting at 146 a share. I wonder when that will take off. I just don't know. Spire down 9 cents at 11.01. Over on Apple, we are sitting at down 161 at the moment. Tesla down 697. Microsoft down 740. Google down 250. Amazon down 426. Nvidia down 378. Facebook down 834. Call credit spreads on the Magnificent Seven is where you want to be. That I can't overemphasize it. Maybe I have overemphasized it, but that's what you got to really do. Anyway, there you go. Mitch says, "Hey, Uncle Bruce, I admire what you say what you want, you tell it like it is. Attitude, I don't care what other people think about you, and I have a strong, loyal core following group here. I'm one of them. Thank you so much." Thank you, Cutting Edge and Stock Jockey and Mark K, for your comments today and thumbs ups. Please become members of this channel. You're following me as lurkers. I love you. Would love to have you as members. Rice, Free Range, Aurora, Charlie, Mark, and John Gill. Thank you all for being members, hitting the thumbs up button for us. Thank you. Okay. Charlie C2, good morning, everyone. Corinne, Matt, Jeff, thank you. Stock Jockey, giddy up. Mark Downs, let's go. Number 50. Lorraine is here. 51. James, I will take 52. Good morning. The man, eggs are not essential, but do not buy them until they are chickens to lay eggs. Problem solved. There you go. Thank you, everybody. Franca Villa, Trump will sign executive order at 2 p.m. eliminating Department of Education. 4,500 jobs. Gone. Giddy up. Thank you, Susan Shops and Deep Value, for everything. Charlie, just heard the local bank branch is closing. The new branch is further away, and there won't be any tellers there. Just one person to greet and direct you to financial advisor or mortgage specialists, etc. Welcome to the new world of banking. Regular transactions, deposits, withdrawals, etc. all done online or on phone banking from now on. Fascinating what's going on here. Thank you so very, very much for this information. This is fascinating. Larry Titus, number 70, Bobby Atkinson, 71, and I've been a member for 36 months on this man's channel. Juan, I've been a member for 4 months. Doesn't time fly? Neat. Indeed. We're opening in a minute. We should be opening now. What's going on, baby? Hello, everybody. Thank you all for joining me. Welcome. What else is going on? Good afternoon, everyone. Charlie, don't be silly. The man, never going to happen. Welcome all. Okay, there's all kinds of talk going on while I'm talking. It's okay. Bagel Babe, I've been a member of this man's channel for 32 months. Whoop, whoop. Thank you so much, everyone, for letting everyone else know how long you've been here. It is unbelievable. Stephen Butler, number 93 on the thumbs up. David Queenon, I've been a member. I'm following this man. I'm giving him a 103 thumbs ups. Thanks, David. And thank you for being a member of this channel. Kilowa, Lorraine, usually set it to mirror mode, whatever that means. Mr. Premium, happy Thursday. Time to fill our pockets. No, I couldn't agree with that anymore. Thank you. Savage of Wall Street, good morning, my fellow simpletons and degenerates. No one else can use this greeting, by the way. It's proprietary. Laugh out loud. For those asking, when is it a good time for puts? Looks like a beautiful day for cash secured puts today. There you go. Giddy up. What else is going on here? Savage thinks that I think SoFi might go back to 10. You heard it from me. It might go back to 10. Dude says, let's go. I want to get some of this stuff. Larry, the bells are ringing, baby. We're up and running. Let's go, man. Fun times. Let's see what else is going on here. Did anyone see that ATIP went up 50% yesterday? Is there a recovery going on? Samuel, Richard are here hitting the knee emoji button. The Knights of the Knee must be honored. Beach Boy, I ain't here. Mr. Rugman is, though. Charlie C2, neat, stock guy. Uncle Bruce, how many paid members do you have? That is proprietary information. That is top secret. That cannot be shared with the world, but it's more than 2. It's more than 5. There's a few here, and you're keeping us on the air. Thank you very much. Thank you all. Welcome to the party, pal. Glad to make your acquaintance, everyone. Thank you all for being with me today, every day, all the time. Gold Bagel members, you know how much I love you. Thank you so much, Gold Bagel members. Much appreciated. Chillin' members, I love you too. I just wish you became Gold Bagel members. But it's okay. It's all right. Please subscribe to this channel. At the very least, please subscribe to this channel. Thank you again. We're going common only for members now, which is kind of what we do around here. Thank you, everybody. 83,463 members are subscribers of this channel. 83,463. That's the number right now. Would I love to hit back to 100,000 subscribers? Oh, I'd love it. But I don't count on it. Not with 200 and something watching at one time. We're not going to 100,000 subscribers. This channel is a mega niche channel. That's what this channel is. And there are 268 people here right now, as best as I can guess. And these are option writers. And option writers are making money in this market, have now for 4 years in a row, will for years and years to come. But you are a special kind of individual that you are willing to learn a whole different way to play the market. And you are willing to be a George Costanza where you're the opposite of everybody else. And you really don't have a club to find other than the club here to hang out at, because there are very few YouTube channels that specialize in talking about how to get rich in the market by writing stock options. Most channels out there talk about how to get rich buying real estate, how to get rich owning a vending machine, how to get rich running a dry cleaner, how to get rich being an Amazon reseller, how to get rich working from home, doing whatever the hell you have to do, buying stock at $1 and selling it at $1,000 a share. There's many channels out there for that kind of service. This channel, we talk about selling something for $5,000 and buying it back for $1,000, selling something for $25,000 and buying it back for $10,000. Selling something for $18,000 and buying it back for nothing, never buying it back. We have writers here making money from the option market that they really can't believe how much they're making, and their friends don't believe them. This is really the amazing truth for many of you who are new to this. You become an option writer. You take my classes from my website. You go to stockmarketswithbruce.ca right there. There's the website. You go to my website, you buy a class, number 1, you pick up number 2, you open up a practice account, which I beg you to do, and you start trading options, writing options in a practice account just by following what people are telling you they're doing here. You literally mirror the trades that these people tell you they're doing. And you sit there with your arms folded, as skeptical as you should be, going, okay, I've watched a couple of his classes. I have the basics of how options work and how they're created and why they're, who buys them, who sells them, how they go up, how they go down, how they expire, what happens if I write an option and it expires. Then I take a second class and I'm learning how to write calls and how to write puts, all of this stuff. And I'm absorbing all the info that I'm getting watching him live but I am folding my arms, and I've written some options in my practice account because I can't lose anything doing this. And we're just going to see if any of these people that claim to be making money make money or not. That's what happens around here. I'm a niche channel. Generally speaking, however, what seems to have been happening over the last 4 years or so is that people who come in here watch other people trade, and they begin to realize that not only are these people writing and doing, writing and buying back contracts and rolling contracts, they seem to pretty well all be Gold Bagel members, because of course he goes to membership only mode. Only members can speak now, but a lot of them are these guys. And this makes people ask themselves a simple question. Why, out of the 259 people that are watching him right now, 260, 300, 240, 400 people, whatever that number is, it fluctuates all the time. Why is it that a majority of those people seem to be Gold Bagel members? Why do they pay him? They actually pay YouTube. Why do they pay YouTube $25 a month to be a Gold Bagel level member just to comment here? Because you can be a chillin' member for $10 and comment here. You don't even have to be a member to comment here. You can just do a super chat for $1. You could buy a sticker for $2. You can do a super chat for $1,000, whatever you want, and make a comment. You don't have to be a member of this channel. Why are there people paying $25 a month to YouTube to be this guy's Gold Bagel level member? Because other channels charge nothing, or charge $1.99 or $4.99 or $3.99. I mean, this is one of the most expensive YouTube channels out there to be a member of. Why do they bother? You hang around here a while, you'll figure that out. It'll become quite apparent to you as the Gold Bagel members are going, I just put in a stake bid to buy back these contracts I wrote 3 days ago. Oh my God, Uncle Bruce, I just made $4 fucking grand. I made $6 grand. I made 18 grand. I'm making 20,000 a month. I'm making $200,000 a year. I have made more money in this market than I've ever seen in my life. I cannot believe it. That's why they pay $25 a month. But until you make money, you're never going to become a Gold Bagel member of this channel. You've got to be convinced for yourself. But what generally happens is that people who write options in the practice accounts and they follow what these people do, they go, oh, well, yeah, that's right. That's right. I wrote that contract in the practice account at $3.84 a contract. I wrote 10 of them, and they're now trading at 28 cents each. I buy them back right now, and I score a really nice gain here, thousands of dollars. And yet he's only charging $200 for every class he has on his website. He's only got 18 of them. I can't give him more than $3,600. That's as much as I can possibly pay him for all of the classes he's made so far. All these lessons combined are $3,600. And there are people making more than that on one trade. And they're going to do this for the rest of their lives. This is when people go, okay, I'm going to take some more of his classes. I'm going to open my own account at whatever, Fidelity, Tasty Trade, wherever you want to trade, wherever you are. And you're going to start to write options yourself. And you're going to find the kind of options you want to write. You kind of like it when you read about so-and-so doing cash secured puts. You kind of, that makes you feel comfortable. Sometimes some of you are going, no, I like writing covered calls. I really like the idea of just writing covered calls. I have a retirement account. I can't do anything in it but just write covered calls. That's what I'm going to do. And I'm going to sell the shares I have because they're underperforming, or the option premiums just don't pay anything on the stock I've had for years and years. But I'm going to now buy stock of so-and-so, or I'm going to buy 3 different public companies. I'm going to buy this one, this one, and this one. I'm going to write options on all 3 of these now. Because at the end of the day, my retirement account has to be worth a certain dollar value when it comes time to be retired. And it doesn't need to own the stock I have already or the ETF I've been sitting on. It doesn't matter what's in it. It's what it's worth. And so if I buy NVIDIA stock, Apple, and Microsoft, and I write options on those 3 companies, then I'll earn income from those three companies. I'm making them earn me money, which allows me to buy more shares of those companies, which allows me to write more options on those companies. And I'm getting more income into my retirement account, compounding the income in. And if every 2 or 3 months these contracts mature out, I have to roll them over. And last month I wrote 15 contracts. This month I'm writing 17 contracts. 3 months later, I'm writing 20 contracts at a time. And 3, 4 months later, 3, 4, 5 months later, I'm writing 25 contracts at a time. This is where I see the growth coming. This income coming in is growing, and it's cash, which allows me to load up on the stock that's doing the worst. Which of the three is not performing? Which of the three have dropped in value in the last few months, where I can now buy 200 of those, or I can buy 100 of those? Let's buy 200 of those and write 2 more contracts than last time and grow my option revenue, because that's what it's all about, growing your option premium revenue. And the classes you're taking make you smarter, more in tune with how the option market works, and you're beginning to understand the psychology of the stock market and the option market players, and you're beginning to realize, oh, this is why I make money. And now I get it. Now I know what Bruce is talking about. This is what these people keep telling him on these comments. They cannot believe the kind of money they're getting on some of these contracts, and they're just going, I can't help but take this money from these people, because these contracts shouldn't be up here. They shouldn't be this expensive. I love being the casino, is what you're going to start to say to yourselves. And you'll grab all 18 classes. You'll watch a class a week, 2 classes a week, 3 classes a week. Saturdays will be your class day, because you're at home. You get a few hours alone. Sundays are class days. Whatever it is, I don't know. You'll figure out. You'll dedicate time to taking my classes, because you realize that every time you take one of these, watch one of these, and rerun them and watch them again, you are getting smarter on how this market works, and you're picking up insights no one ever told you about, and school will never teach you. You're going to be smarter than your kids in the option market or the business of the markets. I know there are viewers here who are parents, and you've got 20-somethings and 30-somethings as your kiddies, and these kids think they're the smartest person since the invention of bread, sliced bread. They're convinced that they know everything there's to know about the market, because they have an app on their phone with Robinhood, and they're buying and selling stock, and some of them are venturing into the options market, and they think they are so smart because they can control 1,000 shares of NVIDIA stock with only $1,500. Oh, they are so slick. And you, the parent, are sending Uncle Bruce $200 to take lesson number 3, 4, 5, 6, 7, and you're just absorbing info while these kids are running around with their lives and friends and whatever, and they don't realize you know more about the stock market than they know. And one day, at one moment in time, somehow, some way, the kid is talking to mom about whatever, and the kid says, hey, I made $500 last week trading some options on NVIDIA. And they're bragging about it. And mom says, quite innocently, oh, well, Dad brought in $4,000 last week from writing options on NVIDIA. And the kid is going, what? What is Dad doing? Yeah, Dad's writing options on that stuff. You should talk to Dad about that. And then the phone call comes, another phone call. Another example is where the youngster calls mom and dad and says, I kind of lost $4,000 on my option trade last month. Can you spot me $1,000 so I can make the rent? Because they're using rent money to play the market. And they lost 5 G's, and they don't have the rent on time. They don't get paid till next Friday. I'll send you $1,000 next Friday. And mom and dad help out. And mom and dad say, we made $5,000 last month or 20 grand last month in the market. What kind of trading are you doing versus what we're doing? This is when the kids go, what? You're old. You're not young and hip like we are. We're the generation that's taking over. How is it that you guys are making money in the stock market? Where are you learning this stuff from? Because they have never heard of Uncle Bruce before. Because you've told them about me, but they didn't listen. They don't have time to watch me every day. They just don't have the time. They're looking for answers now without putting in the time. Welcome to the world at large. We're down 562 points on the Dow, by the way. We're on a down dip right now. It be what it be. It is what it is. Welcome to the party, pals. Savage on Wall Street. Oh, baby. My 185 $12 SoFi covered call expiring Jan 26 are coming back to me. These covered calls are coming back to me. Got almost $4 a share, and I was underwater for months. But this is the beauty of shrinkage. Patience is the key. Finally, I am green on this trade. SoFi is $12.81, down 62 or 61 cents a share. The Dow's down 560. ASTS is down 19 cents. What a run this thing has had. Rocket Lab down 68 cents. GameStop down 65. AI down 77. And Supermicro down 252. NVIDIA down 399. Tesla down 1273. The spiders are off 860. The Qs are down $9. The spiders, they're at 574.45 right now. The 52-week high on the spiders was just a couple of weeks ago. I was getting emails from viewers worried about their call credit spreads on spiders. They reached 613.23, and they're now at 574. This is not a lot of time. This is from about February the 19th to today. So that is 15 days. In 15 days, we've gone from 613 to 574. $37. Over 5%. That's 6% drop on the SPYs. 6% in 15 days. I have been begging you and begging you and begging you guys to get out of your stocks, go cash, and write options on cash. And now you see why. A Savage on Wall Street. Fun story, Uncle Bruce. Fun story. Because I know you love a good story, Uncle Bruce. This friend from work 9 years ago told me the stock market was gambling. During COVID, I told him about covered calls, and he laughed. He bought Coinbase at $400. Something funny happened last night. What is Coinbase doing right now? 216 right now on Coinbase. Something funny happened last night. What would that be, sir? Would you mind filling me in on the details, because I'm clueless? The high for the 52-week high, 349 on Coinbase. It hasn't even been at 400 in the last year. Coinbase right now is at down to 216.91, down 554. Here we go. Funny thing happened. The guy took me to the side at work and almost begged me to lend him $2,000 because he's in a tight spot and needs cash to pay bills. And me, guess what? I'm chilling. Holy moly. The AI 30s Jan 26 calls that I wrote for 914, Bruce, just bought 10 of them back for 332. And giddy up. There's just about a $6,000 gain on 10 contracts. You're buying them back for $332 each. You sold them for $914 each. There you go. Thank you very much. H. Gregory, 128 on the thumbs up, Bruce. You're getting those thumbs ups today. It is fascinating, isn't it? I know all of you are hearing this kind of stuff from time to time. You get these kinds of comments, or you get someone begging for help. They never wanted to learn how to write options. I don't have the time. I just don't have that much time. I'm just putting my money in my 401k. And the boss hired a manager, and they're running the 401k in all kinds of different ETFs out there, and it'll all be fine because markets on average go up 8 to 10% a year, and I don't have to do anything. And now in the last 2 weeks, 3 weeks. We've seen corrections in the last 5-6 weeks. I told you about these PE multiples and the down dip. Hello. This is not going to stop. We're not at the lows. We're going lower on the overall market. There will be winners inside the market. Look at ASTS right now. It's up 79 cents now. It's up again. 34.59 a share is where it's at right now. The Dow is down 426. There will be green shoots here and there. SoFi will go to the 20s, no matter what this market does. But right now, it's getting caught in the draft. But you're going to hear about tough times out there. You really are. It is the way it is. That's the way this market works sometimes. Let's get some updates, shall we? Where we're at, Hector, 131. Good morning, everybody. Thank you for these thumbs ups, everybody. You know how much I appreciate them. Let's go with an update right now. The Rocket Lab shares are sitting at right now $20 a share. They're down 40 cents. They have recovered from their morning lows. Remember in the pre-market, we were at 1940, 1945, 1950. We're now at 2002 on Rocket Lab. We're surging higher. We're down 41, but we're coming on. SoFi down 50 cents at $12.92 right now. The low on SoFi this morning has been $12.73. We're back to $12.91 on 7.1 million in 22 minutes. GameStop down 54 cents at 24.54. 23andMe is down 3 cents. Spire is up 30. ATIP is 170 a share. SmartRent 125. Apple down 71 cents. Tesla 268.03, down $11. Let's see where we at. Right there we go. There we go. Microsoft down 316. Alphabet, Google down 109. Amazon down 478. Nvidia down 318. Meta down 1046. Supermicro down 175. ASTS is up right now 6 cents. AI is down 68. Palantir down 436. MicroStrategy, MSTR down 313. Unity down 81. Goldman down $14. Cisco down 78. The Spiders are down 784 at 575. Qs are down 826. Netflix down $35 a share on Netflix, $9.55 a share. The 52-week high is 1,064. We've given up $100 on Netflix. That's 10%, roughly, since the highs. Pfizer up a penny. The ARC Innovations, Kathy Woods, the high was $68.40. We're at $53. $15 pullback on ARC Innovations, approaching 25%. Just to kind of put things in perspective here. IBM down 360, the high of 265. We're at 247. Uber down 99 cents. HPQ at 29.73, up 21. Home Depot down 268. They got up to 439. We're at 383. Vanik Semiconductors, SMH, got up to 283 in the last 52 weeks. We're at 223. $60 pullback on Vanik. Adobe at $446 and Enphase $57. Welcome to the party, pal. Thank you for joining me from around the world. Welcome to the show. Have you gone cash? If you've gone cash, you're hauling in interest and you're going to get a lot more interest on your money. Your monthly dividend income, this interest income, which I call a dividend income, is going to continue to rise. And I congratulate you all who are doing that. The poll question is out. We have 139 thumbs ups and counting. The poll question, 150 people answering now. Because I sold my stocks and I hold cash, in the last 6 months, I have earned a certain amount of money in interest in total. $100 to $1,000 in the last 6 months has come into my accounts from cash. 71% of you are saying, I'm getting that much money now in the last 6 months. 19% of you say I've received so far between $1,000 and $5,000 in the last 6 months from my interest, just on interest. 5 to 10 grand in interest. 6% of you are hauling in that kind of money. That's like 9 of you guys are hauling in 5 to 10 grand in interest in the last 6 months, and over $10,000. 4%. of you guys, 6 of you have hauled in more than 10 grand in interest in the last 6 months. This is what I want to know. Where are you at with your interest? Add it up. How much interest have you been paid in the last 6 months in all of those accounts of yours that are sitting on cash? Is it 100 to 1,000? Is it 1,000 to 5,000, 5 to 10 grand, or more than 10 grand? Let me know. Thank you again for the thumbs ups, everybody. We have a 139 or so far registered thumbs ups. Keep them coming in if you can. We're trying to push for 200 every day if possible. Thank you so much for helping out. Savage of Wall Street, I wanted to smack him upside the head. I talked to this guy about covered calls for hours. He has a little girl, and she's the best friends with my daughter. He got 40 Coinbase when I told him to buy SoFi. Look at that. $7.90 for January 2026 cash secured puts on SoFi. Yes, please. I will take $8, almost $8 for the SoFi cash secured puts. Those I think must be 20s. Very interesting. J-Boy, my GameStop 29.50 covered call that expires on Friday are up this morning with GameStop down 60 cents. Laughing out loud. What is up? It could be that your contracts don't trade every day. And it might be since the last time it traded, it's made this move. I don't know. Must be the opposite day, says J-Boy. B. Tizzle, the Savage of Wall Street sounds like some people I know. It's funny how they always say they don't have time or money to learn to write, yet they spend years throwing money at the hype stock of the day. Well, if you bought $400 stock, 40 of them, that's $1,600. No, 16,000, right? 40 times 400 is $16,000, and it's not worth $16,000.
Just ask Splair. He knows how this works.
Splair knows how this works. Samuel, J-Boy, that might be because of implied volatility due to earnings coming up. J-Boy, I'm sure you're right. Stephen Butler, somebody may have whispered, may you live in interesting times, because we are living in interesting times. Yes, indeed. We're down 61 on GameStop. We're down 61 on AI. We're down $1.46 on SMCI. Rocket Lab is down 49 cents to 19.90. ASTS is up 16 now to 33.96. And SoFi is 12.92, down 51 cents at the moment. I think we have recoveries, though, on most of these stocks going on. The Dow is still off 531. And so that is, we're watching that carefully. Down 1.25%. S&P is down 1.5%, down 86 points. And NASDAQ is down 1.7%, down 311. Crude oil holding a 40-cent gain at 66.71. Auntie Jen, how are you?
Well, that's below where the Alberta budget pegged it.
Is that right? Yeah, that's true. Yeah, the Alberta budget is dependent in Canada on oil in the 70s. And it's at 66. They're losing money there.
They peg it where they think that's the lowest it can go, and then they work their budget off of that.
And they're wrong every time. They overestimate the value of oil every time. The public knows it. Every voter knows it. It's the same old game. And governments that are in deficits keep talking about great prices for oil and gas, and all will be well. And the public goes, you're $10 under your budget.
And then Saudi Arabia opens the tap.
That's right. And every dollar that the oil price is below your forecast, you don't make $200 million. And if you're down $10 a share on your estimates, you're going to be a $2 billion spending deficit again, and you never admit the reality and or allow the street, the market to tell you. You just guess, and you're always guessing optimistically wrong. There you go. It is what it is. Welcome to the party. Free range. Neat. Richard Carlin, good morning, Auntie Jen.
Hey, Richard.
Pick Holmes says, I think SoFi is going to be shorted down to the $10 level before it finds a floor. That is guesses from the public here, from my viewers. Well, you go guess what you want. We're $12.99 right now. I wouldn't be surprised if we had a $2 up day at any time.
I don't want it to happen,
but
that's just because personally I think shorters are scum.
Well, there you go. A 1302 on SoFi right now, already back over 13. Well, we'll see. If you've written cash secured puts, even when you sold your stock at 13, 15, 17 a share, and you wrote cash secured puts, you're sitting on a mountain of money. And that's exactly where you want to be right now. Just sit on a mountain of money. Dare them to exercise you. If you've written cash secured puts that expire in April, May, June, July, roll them into January 2026s and take the extra cash.
Well, while you're sitting there, it's a perfect opportunity to turn on the TV. It's the last day around robin in the men's.
Well, there's men's curling championships on TSN
This
right
is
now.
where we work out the playoffs.
If you can get your hands on TSN television, you can watch curling all day. You don't have to worry about the market.
Somebody else shows it, but I don't know. Out of very pretty Kelowna, British Columbia.
The Canadian championships all over American television, I'm sure, somewhere. Oh, yeah. The ABC's got to be covering it, don't you think?
Scotland's watching, I'm sure.
Oh, got to be. Watching the Canadian championships. Yeah.
Well, between Canada, Scotland, and Nicholas Adine, there's your winner somewhere in there.
Okay.
Unless someone breaks a leg.
Okay. Ed says, I can't seem to get credit on my 2022 Rocket Lab. When I push it further out than a month, prices get worse. I'll have to take on more risk and widen the spread, perhaps. You might be doing that. 1993 right now on Rocket Lab. You need simply a $2 run, and you're laughing. That can happen at any time. We'll see. Beach Boy, Auntie Jen, how you doing?
How you doing,
Beach Boy? More importantly,
wait a minute, that's Alberto.
Yeah, more importantly, what are you doing with this homeless guy who hustles making us money and nothing else? Shame on you.
Shame on me.
What's with this guy?
Fool me once, shame on you.
Yeah.
How's your new baby?
Oh, the grandbaby's doing.
Grandbaby's doing good.
They're just coming out. They're coming on out. Unbelievable.
Keeps Grandpa's going.
Keeping Grandpa busy, I'm sure. Exciting stuff. Yep, all the burden of grandchildren is now on you. It used to be your mom, now it's you. That's it.
I don't think grandchildren are a burden. That's where you get to do all the stuff you wished you could do as a parent, but you knew you couldn't. Where now, just have another chocolate bar and send them home.
Send them home all sugared up. Oh, yeah.
By the way, here's a kitten.
The kid didn't go to sleep last night. Why is that? Oh, they hung out with Grandpa. Oh, that's why the kid can't sleep.
Well, no, he can't sleep because Grandpa and him had a nap in the recliner.
Why is this kid always talking about option expiry dates? Every time he visits with Grandpa, he comes home talking about writing options. What's going on at Grandpa's house? Something is going on over there.
We have a picture, I think, of every one of my father's grandchildren sleeping on his belly while he's sleeping in the recliner.
Oh, yeah.
Every child.
Every grandchild slept on Grandpa. Henry, some people think Trump creates chaotic markets for his cronies to buy dirt cheap opportunities. What do you think, Uncle Bruce? I don't think that's the plan. Bitcoin, Uncle Bruce, I listened to you. I have cash secured puts out to Jan 26. I'm fine, actually. Nice going. Alex, you get to hand grandchildren back at the end of the day. It sounds like a good deal to me.
Right?
No kidding.
Yes, exactly.
Hand those crazy kids back to those silly children of yours and get out of here. Leave me alone.
And you get to tell them all the things that you did as a child.
Oh, boy. I remember when I was your age. Oh, no.
Back in the 70s. Oh, my goodness, you wouldn't believe what we did.
Yeah, Beach Boy, grandbaby's doing fine. His dad writing cash secured puts between diapers. There you go. They are buying.
Excellent plan.
Juan says that all of the cronies of Trump are buying back the market. Juan, good morning, Auntie Jen. There you go.
Good morning, Juan.
Oh, the Dow's improved. It's down 400 from down 500 plus.
Yeah.
SoFi 1311.
Because at the end
back
of
up
the day,
to 1311.
there's a lot of cash out there.
Look at Rocket Lab 2010. It's only down 30 cents. Rocket Lab could take a shot at any time. GameStop down 32. AI down 31. The market's improving on some of these stocks. The Dow's down 350. It's improving. Down 0.81%. We'll see. We'll see.
We could still have a steady downhill swoop.
Well, yes, we've talked about this.
I just don't like those chasms and then back up.
It's the market.
No crevices on the graph, please.
Fun times. Yes. Yes.
So is the market ready for a bagel? There seems to be a
Well,
lot
I
of
think
red
the
out there.
market's queuing up for rising prices.
Yeah.
Maybe a bagel is in order.
I think so.
To help it out.
That's obviously what makes it happen.
I think we take a variety of those meats
Okay.
and the Felipe's
Okay.
mustard, a good amount
Both
of that.
sides?
Oh yeah,
Okay.
and we crank that up on a bagel and some cheese,
Okay.
and we get busy.
Go for the
We get
full
busy.
Subway club.
We get busy living or get busy dying, and right now
I don't want to say which one this is.
depends how much mustard you put on the thing.
No, it depends on all that bad chemicals in cured meat.
The cured meat is nullified by the mustard. The mustard clarifies it, cleans it all up, makes it all good for you.
I had a brother who used to work at the stockyard. We have a big stockyard in
We're
Alberta.
going to get one of these gross stories. I don't want to hear this.
No, he always said to me, if you don't want to eat hot dogs or bologna, I'll just tell you how we make
Don't
it.
tell us about operations, please. I don't want to hear about
Well,
operations.
and that's what I said to him. It's like, no, I love my hot dogs and bologna.
Don't tell me these
I
stories.
don't know.
I don't want to know.
Their lips and
We don't
the
want to
other
know.
end.
Don't talk. Stop talking. Stop. Just stop. Just stop talking, please. Just stop. I just wanted a bagel with an assortment of cold cuts, an assortment of cold cuts and some cheese and some of the Philippe's hot mustard. That's all I'm asking. I don't want all the background.
Your nitrates are getting a little low.
I'm just a guy who's trying to live into his 70s.
You know, this is a bad chandelier.
No kidding.
When I hit my head on it.
Well, there you go. There you go. Yeah, fun times in the OK crowd. We're down 330 on the Dow. We've come back about 200 points. SoFi 1314, only down 28 cents. I think this is the high of the day for SoFi. Am I not mistaken? It is the high of the day. SoFi is at its high of the day right now. Interesting stuff. The ASTS up 125 to $35. Rocket Lab 2008. 2017 is the high of the morning. We're at 2014 right now. Rocket Lab is going higher. It is oversold by $5 a share. Rocket Lab is going to go higher. We're down 26 cents. That's all. 26 cents. Go Rocket Lab, go. GameStop 24.82 down just 25 cents. This must be the high of the day. It is. This is the high of the day for GameStop. We've only traded 780,000 shares. There is no selling. They've run out of stock on these guys. GameStop is making money. Rocket Lab is turning it around to make money. SoFi is making a bucket of money. These stocks are going to go higher. AI down 20 at 22.44. That is at its high of the morning as well. 766,000 traded. No selling coming. It's the stock. There's nothing to buy. The sellers were wiped out. They're gone. There's nothing. It's going to go higher now. They're going to go higher. Giddy up. Well, we'll see here. The NASDAQ has improved. It's only down 198. It's down 1.07%. That has improved. And NASDAQ down 0.97 and the Dow down 0.75. All have come back and improving here. There are buy waves coming into the market. Up $1.50 on the ASTS. SoFi 13.15. Rocket Lab 20.18. We're coming back on right now. NVIDIA only down 2.66. Supermicro down 70 cents. Even Tesla is improving. It was down to 2.64. It's now 2.69. $5 bounce back. It's still down 9.48, but it's coming on Tesla too. Interesting. Spiders are down 570. They got down to 573.47. They're now at 577 on those ETFs. So they've improved 350 a contract or a share or ETF, whatever you want to call them, at down 606 on Spiders, coming back on. Palantir down $3 at 86.96. Palantir got down to 84.21. We've improved 270 on Palantir. Every stock here is showing rebounding higher. MicroStrategy is green, up 335. Costco down 12. Coinbase up 76 cents to 223. There you go. Google down 35 cents coming on. Apple is green, up 60 cents and going to go higher. Broadcom got down to 177. It's now 184. Intraday, we've come back substantially here. Still down 680. The 52-week high on Broadcom, 251, trading at 184. They've taken a hit. Microsoft down $1.25 at 399.76. We got down to 393. We have recovered $6, 640 recovery. We're only down $1.23. Microsoft is about to go green here very shortly. Intel down 20. Netflix is still down $27. It got down to 946. It's now 963. This is $17 recovery on Netflix. Still down 28. Bad day for Netflix, but it's bouncing back. Meta down $11 at 645. The lowest 642. And on EI Lilly, we're up 138. Uber is up 17. Amazon is still down 374. Got down to 202. It's back to 204.60. So Amazon is recovering as we speak. So there's green shoots beginning to show here. We're down 305 on the Dow. We're not down 550. We're now down 295 on the Dow. We're definitely recovering more ground at the moment on those big indexes. SoFi, 13.16 now, down 27 cents. The high today, 13.19. We're right at the high, 9+ million traded, run out of stock for sale on SoFi. ASTS 35.15, Rocket Lab 20.02, GameStop 24.79, AI 22.40, SMCI down 94 cents. Welcome to the party, everybody. Nice to have you here. Giddy up, everybody. Let's go. What else is going on here? $10 on SoFi. I don't know, but it would be a gift awaiting there. Bobby, oh yeah, when I get grandkids, they will get chocolate ice cream on the way back to mom and dad. Walter, good morning. Auntie Jen, free range. Yes, the ethical dilemmas of breakfast, Bruce. Gustav, here's a $2 donation. I just wrote SoFi, $20 cash secured puts expiring Jan 2026, and they gave me 805. You're willing to buy the stock for $11.95 a share. It's at 13.17. Nice job. Not even a year, 9 months. Well done. Henry, I sold cover calls on Rocket Lab, $23 after my assignment last week. Taking money. Way to go, Henry. Taking dough. Good job. 13.16 on SoFi, down just 27 cents. Wouldn't take much to pop this back to $14 and beyond. Rocket Lab 2013 down 27 cents. Back to 22 in a heartbeat here. GameStop down 29 cents. These are not bloodbath numbers at all. We're down 19 on AI. We're down 79 on SMCI. All these stocks can go green in a moment. In 5 minutes, they can all go green. NVIDIA down 269. Tesla down now 8.99, still coming back. Palantir down 2.95. MSTR up $3 now. Coinbase up $1. Google up a dime, Apple up 70 now, Lilly up 3, Uber's up 16 cents. We're going green here. Pfizer up 8, HBQ up 26, more green showing up. AMC is up 0.3 of a penny at 305 now. Oh my, Royal Caribbean down 570 to 225. The high for Royal Caribbean, 52-week high, 277. And when it reached these high levels, it was being told, Wall Street brokers were saying, buy it, buy recommendations at ridiculous highs. It's still trading at 20.6 times earnings, down 572 right now on Rocket Lab. Giddy up, everybody. Unbelievable. All right, well, let's see. The market now down 290 on the Dow. And we have got some green shoots beginning to show here and there. It looks like a buy wave comes in and then peters out, and then another buy wave, and we peter out, and another. I think this might continue because stocks are oversold and we're running out of paper at the low end. There's not another wave of selling coming in. It doesn't seem to be happening. But I've warned you and I've told you, go cash, and build your cash balances. Your interest payments to you are going to increase substantially, quite nicely. Thank you very much. The bond market is yelling it out as loud as possible. There you go. Anyway, thank you all for hanging out so far. Appreciate you. Congratulations, those of you taking classes, taking the steps necessary to change your economic life completely. You're grabbing the cash. You're taking the money off the table. This right here is the comment. This says it all right here. If you can write 10 of these, if you are sitting on 1,000 SoFi and you sell them at 13.18 and you write 10 of these and bring in 8 grand in cash on top of the 13 grand by selling your stock, you just sold your stock for $21. You just got paid $21.23 for your SoFi right now. Right now, you're going to get interest on that money. Take 6 months of interest at 8%, you get 4% more in interest on a $21 sell. That's another 80 cents a share. That takes you almost to $22 a share. Hello. Thank you very much. Stock wants to go back to 15, 16, 18 a share. You don't care. You'll buy those puts back that are 805. You'll buy those back for $3 and you'll now write 25s and you're going to get $8-9 for those, and you're going to add another $5-6 per share. That's $5-6 grand into your account. You're now sitting on $27,000, earning interest on that. Hello, anybody home? Hello, yeah, nice going. It's okay. Go SoFi, go 13.18 a share now on SoFi, just down 26 cents. Fascinating, absolutely fascinating. Well done, each and every one of you. I love seeing these comments about the kind of money you can bring in by writing these contracts. It's just ridiculous. This is a beautiful thing. Keep it going, guys. Don't stop now. The gamblers are going to hand it to you left, right, and center. Love it. Down 302 on the Dow at the moment. Oil up 51 cents. No recovery happening there, man. There is no comeback, big time return to higher levels there. Thank you again for the thumbs ups. Everyone out there who's taken the time to find the thumbs up button, you've nailed it for me. 153 thumbs ups are now in the collection box. Thank you for that. 160 votes have gone through now on this question of the day. 69% of you say, because I sold my stock and I hold cash in the last 6 months, I have earned between $100 and $1,000 of interest from the cash I'm sitting on. 69% are saying that. 19% are saying I've made between $1,000 to $5 grand so far in the last 6 months, just in interest. 5 to 10 grand, 8% of you are telling me I've hauled in between 5 and 10 grand in interest, Bruce. This is adding up. And 4% are saying I've generated more than 10,000 in interest in the last 6 months. I expect this number to go higher in the next 6 months. I will not be surprised that some of you guys are going to be hauling in 20, 30 grand in interest because of the amount of cash you're sitting on. It's just no doubt in my mind. Auntie Jen, thank you so much for this, sodium-based, laced, nitrate-based, killing, carcinogenic bagel that's going to kill me someday. I might not make 100. I might only make it to 99. Thank you so much for getting me at least to 99 years of age.
Can you imagine what we'd be like?
I'm already having trouble adapting to being 69, let alone 90.
Our poor child.
Richard Garland, bagel time right now. We're down 279 on the Dow. We're improving. We're coming back.
There's a challenge there, bagel.
And let's see what happens. 1323 on SoFi.
There were bubbles in there, so you're going to find little swimming pools of
Oh, yeah.
Oh, yeah.
Oh, yeah.
Everybody take your place.
Oh, I need this. 2010 on Rocket Lab. Let's go. Giddy up. Bagel. Walter Young. Oh, wow. Ham and eggs, bagel. Let's go.
No eggs today. No.
We got here ham slices, turkey slices, chicken slices, I guess.
Yes.
Cheese, butter, and Philippe's hot mustard sauce. Oh, my. Mm, mm, mm. I love it. Watching the Dow and the markets go, baby, go. Mm. That looks like a tasty photogenic bagel you got there. Mm-hmm.
They are very photogenic, aren't they?
Mm. Whole Foods, whole paycheck is where we buy these bagels. $6 for $6 a bagel. They toast up real nice, and they're great. Mm, 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 mm. What's that?
You haven't done afterwards when you go and get street food from Whole after being in Whole Foods. Never.
She's trying to whisper something to me so you won't hear it. And I don't understand what she's talking about. I'll get the dope slap later. One. SoFi 1322. Get those cash secured puts, people. Anti-Gen's food truck for the win. Walter, thank God for our wives. We are well cared for here. My goodness. They tolerate us, don't they? Unbelievable. I do the best I can to cook myself, but that's later in the day. But sometimes no cooking is necessary. Take me to In-N-Out, please. Yes, ma'am. We're going to take you to In-N-Out. Oh, yeah. Dow's down 249. It's improving. SoFi 1323.24. Rocket Lab 2016. Let's go. Let's go. Let's get some movement in here. Thank you, everybody, for joining in today. Love the fact that you're with us. Welcome from around the world. Giddy up, kids. I'm going to try to make you richer here. One way or the other, we're going to make you richer. Thank you all. So good.
You just hit a pool.
Yeah. Nice. Very good. Let's get a refresh in here. Here we go. 157 thumbs up, so we're only 43 away from 200 today. Thank you, everybody. 162 respondents for the poll question of the day. Thank you for that. Keep coming in, kids. Hit the thumbs up button. Keep us posted. Let us know how you're doing. Anybody making money out there? What kind of options are you writing, and what stocks in the last couple of months have given you the most returns? Love to hear that. I love that kind of thing. What kind of option writing are you doing? Are you doing credit spreads on any particular stocks that are really paying for you consistently every couple of weeks, or you've had some nice surprise earnings come through? Let me know. Love to pass that info on. There we go. Apple's up $1 now. Microsoft up 73. Google up 112. So some of the Magnificent Sevens have gone green. MSTR is having a good day, up $7. It's had a good week. Uber's up 32 cents. HBQ 29.66, up 14. It's coming back a bit. Okay. Costco's earnings come out today. Focuses on tariff news. That's what's dominating Costco's financial results later today. Mm-mm. Thank you all. BP, Uncle Bruce, with Tasty Trade, we don't get interest on uninvested money. Do we just buy ETFs like BILs? Otherwise, there's no point selling all our shares just to have it sit idle. Yeah, I would be buying ETFs. Look for either the BILs or look for, do a Google search on the best yielding corporate bond ETFs. You might get upwards of 7 to 8% for those. They vary. Some are higher yields than others. Look for monthly dividend payers that pay dividends every month on interest, and see what you get there. Lee now sitting on $15, $17, and $20 cash secured puts for January 26 on SoFi. I got 120 contracts in play right now. Right on. Cindy B. I wrote 4 cash secured puts on ASTS. I wrote 225s and 230s. Stocks at 34, 36, and they are looking fabulous. Thanks for the person that mentioned those last week. Charlie, let you know why I couldn't sell my NVIDIA the other day. I had the put spread 123.25, closed at 124.92. I also had a poor man covered call trade on NVIDIA at the same time. And then he goes on to say, when the contracts, my spread got exercised, they attached the shares to the covered calls, and I had my poor man covered call trade. I didn't have the buying power to buy back the covered calls to be able to sell the shares. This is why this was a problem for him. Lee Mortimer, just folding my arms, Uncle Bruce. I'm just letting this money come in, letting the shrinkage make me richer. Boeing Tiger, looks like the heavyweight Broadcom reports today after the bell. This should be interesting too. Okay. There's always a reason why some of you with some of your trades get caught up in a margin thing somehow. You're trying too many things at the same time, maybe. Appreciate the effort. Let's just keep working. I had in the money calls to cover, but it didn't matter. It cost me over $1,000. Okay, too many trades on what you're doing. Got it. Keep it simple. Keep it simpler, by all means. 1316 on SoFi. We're down 243 on the Dow. We're down 28 on SoFi. We're down 36 on Rocket Lab. We're down 15 cents on GameStop. We're down 24 on AI. And SMCI, Supermicro, is down about 60, make it down 55 cents. Looks like Supermicro is improving a bit more. It got down to 35.66. It's now 38.36. So it's improved a few dollars here from its low for sure. Now the question is, will it do another run from here? Anything's possible. The Dow looks like it's improving again. It's now down 234. So there seems to be another wave of buying showing up on the big indexes here. Yep, 232 loss on the Dow, a little bump up again. We'll see what happens there. Giddy up. Everybody, welcome to the program. Thank you for joining me this morning. And I'm not going to do more one trade strategy on a stock anymore. Just one at the same time, one at a time. Right on, Charlie. It'd probably be very good advice. Okay, there we go. Last half of the bagel. Here it is, kids. Oh my, oh my, oh my. There's got to be some protein in here. Got all this meat going, Jen.
Yeah, there's protein.
There's protein.
Mm-hmm. There is some good in
Mm.
there. What you can
Nice, wholesome nitrates.
Mm-hmm.
Approved by the federal government. I'm sure it's good. Giddy up.
I'm sure it's just a lucky coincidence that they're all exactly the same shape.
What
and
is?
size. Each one of those different meat products is exactly the same size.
The slices.
Yes.
Slices of meat are absolutely the same.
Don't think about it.
They're very meticulous how they grow their chickens and turkeys and pork products in this country. It's very precise. Free range. Make that money out there, kids. Bagel Babe. You have to have a margin account to trade spreads. And if you want to keep using cash inside the margin account, you have to have as much cash as the width of the spread. If the trade is going badly. Very true. A very rough explanation, but very accurate. It's true. All right. The Dow down 231, 238, kind of hanging around here. We were down 550 half an hour ago, 40 minutes ago. We're an hour into the day. Here we are. This is not a bloodbath here. The question is, will the market now have an update from here? And now that the shock is over, do we have a little pullback and then another surge, another 150-point surge? How is this market going to work all day long here? There are people waiting for the dip. They're waiting for that last dip and make their move. They don't know. They're wondering, was this it this morning? Was this the last of the dips? And now we're going to have a 2-week run here towards the highs again. And then do we falter another time? What? I mean, there's waves of emotion and everything here. I don't know. Here's sirens. They're coming to get us. Here we go. We're going up again. The Dow's now down just 0.5%. Oil just went red. Oil's down 12 cents a barrel. 66.18. We're falling on oil. Bagel Babe, more explanations. If you have $5 spreads, $5 spreads, I mean, they're in the money. You may get a margin call if you don't have $2,500 in your account. This is what happens to me anyway. John, hey, Uncle Bruce. When I do a way out of the money credit spread, I find it difficult to close them out early because I want that last $200 I could easily get if I let them expire. What are your ideas? Well, one thought is to keep your eye open on the option chain for a week or two later in time and see if you can roll into a higher credit spread from where you are. If you brought in $400 and you've made $200, there's $200 left to get. But you can write a new credit spread that's 2 weeks out from here, further out in time than the one you're into, and it can pay you $400 or $500 in the credit. In other words, $200 or $300 more than what you're sitting on. You might make that move. Otherwise, fold your arms another day. Let shrinkage take its effect, because if you're out of the money, you're out of the money. And if you're way out of the money, you're way out of the money. And take a look also at the spreads, the prices of contracts that expire ahead of you. You might still have 2 weeks to expiry or 3 weeks. So there's next week's options, this week's options. Check those out against your contracts. You may find that you have written a call option and bought a call option that are trading at a higher level than obviously the ones that are expiring sooner. But you may find that, the ones that expired this Friday, the spread is down to $40, where the next week's spread is like $80 and your spread is $200. And now you realize, okay, between now and a week from now, and all things being equal, my contracts will shift from a $200 spread to an $80 credit spread within the week. And you may find that, okay, I'll let tomorrow come and go because that kills off this Friday's. Next Monday, I'm 2 away. I'm 1 Friday and another Friday away from expiry. And during that week, next week, Monday, Tuesday, Wednesday, your shrinkage goes from 200 to 80, because the shrinkage from 80 for next Friday's expiries go down to 10 cents, $10. You're next. And the one behind you, which may have been a $280 spread, is now a $200 spread because yours went to 100 and to 80. And that's where you pull the pin. Charlie, the problem was Bagel Babe, that I couldn't sell the shares. I was assigned, I was just kind of a glitch in their system. I had a desk trader to complete the trade for me. There it is. The problem, Bagel Babe, was that I couldn't sell the shares. Gotcha. John T, I'm talking about Netflix, 1,030, 1,040. Bruce, Netflix is getting hammered today. And I'm wondering about my position here because this Netflix at $9.59, down $30. These suckers are way out of the money. Yes, sir. As the day wears on, they may well back off quite a bit more this afternoon. Again, keep an eye on the next Friday after that, the next Friday after that. Thanks, Uncle Bruce, says John T. Charlie, I waited on hold almost 2 hours, all the while watching the stock drop. I would have had pretty much been broken had I been able to sell the shares. I would have broken even if I'd been able to do it right away. This is the problem with today's markets. The SEC has allowed brokerage firms to let you hang and hang and hang, and there's no accountability anymore. They can't handle the millions of clients they've attracted to get you into the game of this multi-dimensional business. And this is why you've got to stay conservative, as I keep emphasizing. Stay very conservative in this market and don't try to do too many trades at the same time. It's hard to do that when you see how much money can be made on certain trades here and there. You want to do it all. I get it. You want to do it all, but you got to stay within your limits. Harder to do than to say. We're down 190 on the Dow. We've improved again with the Dow and the S&P and the NASDAQ improving in value. SoFi 1316, Rocket Lab 2006, GameStop 2492. We're watching them closely. Thank you all. Charlie, call credit spreads. Laughing out loud. Call credit spreads. Mm-hmm. Dow improving again, down 171. Market's getting better. The Dow down 150, another 20-point improvement. 148. S&P only down 35. This was down 77 a while ago. Yep. We're coming on. The Dow's only down 1/3 of a percentage point here. It's moving up quickly. Coming on. Thank you so much, Uncle Bruce. Charlie, you know it. You got it, buddy. Keep the drive alive. This bagel is working. We're down 136. The market's getting better. Let's go. GameStop's just down a dime. AI, 17-cent loss. GameStop's down 8. Rocket Lab down 24. SoFi down 22. The market's coming on. We're down 128 on the Dow. The bagel is working. Dow's down 109. Here's mine coming in. Giddy up. Super Micro is only down 2 cents. It's just about to go green. Jeff, the Knights of Neat are eating bagels. Neat, 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 neat. The bagel power. Here we go. Giddy up, man. Giddy up. Our bagel is done. Oh my, that was good. The Dow's down 102. Thank you, everybody. John T. Question. When I look at my portfolio at night, it'll say that I'm up 1,050 for the day. But when I look in the pre-market, it will say up $650 before trading. What's the reason for that? Well, I can't answer specifically this question because even if you tell me the firm you're using, it won't help my answer. Because I don't know how the valuations are calculated at every brokerage firm around the world with all their apps. So, I can only, in general, give you an idea that it's likely what's going on is that the computers that are linked from the brokerage firms' data centers to the stock market's data centers are always talking to each other. And the brokerage firm wants to know the value of your stocks, the value of your contracts, but sometimes values are determined by the last trade or the bid or the ask or an average between a bid and an ask. They're all different. They're just everywhere, okay? So you may find that you have an account with a total value of X amount of money, and between the close of the day and the opening of the next day, you're looking at your account every few hours. Maybe, you look at your account near the end of the day, and then in the evening before you pack it in, you take a look at your account just quickly. And then first thing in the morning, you wake up and you're all blurry-eyed and you look at your account, and then you're watching me and getting ready for the opening of the market, and you're watching, and it constantly is adjusting, like by dollars, $10, $20, $30, $100, thousands of dollars, depending how large your account is, how varied your positions are, how many do you have. Some of you out there have got 10 stocks, and you got 8 different contracts that expire at different times, different strike prices. You're all over the place. You've got a portfolio a mile long in length, and all these quotes have to be adjusted in real time by the brokerage firm. And until the opening of the market, the actual stock market, and the opening of option trades, we don't have an accurate number. We have an approximate number, and that's what you're being given. So you can't take it, quote, to the bank. You can't take it to the bank and go, I'm up $1,050, because by the time we trade in real time, it could be 50% different one way or the other. It could be 1,500 or down or up 500 or down 300. So many factors. So there's no easy answer to this question, John, because each firm is completely different than the other. John, Elisa, I think Robinhood has these extended trading hours beyond the pre and post market hours. Personally, wouldn't trust those numbers, and I agree with that, because the problem with pre-market and post-market, the aftermarket, is that only 1/10 of eligible investors are even in the market at all. And we can get these ridiculous spreads, trading volumes, and volatility numbers that just screw up everything. And brokerage firms will take a little snapshot, click of quotes, and then it might show in your values, which will drive you nuts, higher or lower. But you have to just condition yourself to realize it doesn't matter until the opening bell in the morning at 9:30. Now it matters. Now it counts. Before that, it's all pretend. John T., I'm at Fidelity, and it seems they always choose the bid or ask that is least favorable to me. Makes my credit spreads look like I'm always in the negative until near expiration. Yeah, well, thanks, Uncle Bruce. Well, John, another reason to be here, friendly voice. And as you become more experienced every day, every week, every month, you'll relax more, and you'll begin to go, this is BS. But you'll also be able to factor in by yourself the value of your account in real world scenarios. But the other thing to remember, that I'll bring up to all of you to let you in on, is that if you're trading options, you're writing and buying back and rolling over contracts that are very actively traded in like the top 10 most active contracts or so, then you're probably dealing with contracts that have a very tight spread. They have a lot of volume. There's a lot of power on the bid, a lot of power on the offer, and volume and open interest. And the quotes are probably very accurate inside your app. But if you're trading in options, you've written contracts like January 26th for SoFi, and you've written $25 contracts. They don't trade like the 20s, and they don't trade like the 15s. You're going to get wider spreads. You're going to get wider quotes. You're going to get wider indications of profit or loss. You have to just buy into that. You have got to accept it. But when it comes time to make your move, whether you're getting out or getting in, keep in mind, stink bids, stink offers for your advantage. This is the power of this knowledge. And again, the lessons will help you in that regard. So there you go, okay? Tons to think about. Eventually, there may well be AI intelligent software available to even retail investors that will indicate to them the value of your account to within 1/100th of a percentage point 24/7. But we might be 5 years away from that. We might be 10 years away from that. We might be a few years away from 12-hour-a-day trading or 24-hour-a-day trading on everything, including options. And this is where you're going to tell your artificial intelligent AI software, you're going to tell it what you want to do. You're willing to write a cash secured put on stock whatever at this price, and you're willing to buy it back at that price. And you give the computer the indications, and you leave it alone. And sometime during the day or the night, you get an alert from your broker, your intelligence software, indicating to you, do you still want to do this trade? It's 3 a.m. and you can get out of this trade on AI and lock in a $1,500 profit. Are you interested in this trade? You go, yes, I am. You get like 30 seconds to respond or a minute to respond. You go, yes, I am. And it locks it in for you. And the next morning you wake up and go, yeah, I'm up $1,500. And you've indicated to the software that when the trade goes the other direction and I can get in again, I'd like to take a new position on this stock with this contract, with this expiry. And again, I'm looking for a return of that. And you may find that you wake up the next morning and you're out of one trade and you're into another. It happened overnight. And you're going, yeah, thank you very much. Let's continue on. The future, I don't know. 40 years ago, I had no idea I'd be talking to you guys about what the hell is going on out here. I had no idea that I'd be doing this. Anyway, Alex says to John, I realize the account value number in IBKR can be very misleading. Since this market dip started, my account value is down but my cash pile is up. John T, thanks Alex for that. There you go. The more you do this, the more comfortable you'll get, and the more you'll oh yeah, okay, I know, yeah, I know. You'll just not worry about it. It's okay. All right, well, anyway, we're down 152, 158 on the Dow. We got down to about 100. Now we backed up a little bit, but we didn't go back to 500. So is this a little pause and we're now going to go down to 50? Remember I said half an hour ago that we could improve by 150 points here at any time. We did at least 100 points. Now we'll see how this plays out. SoFi 1310, Rocket Lab 2001, GameStop 2490, and AI 2235. So these stocks almost got to the green and they backed off a bit. Now the next wave of buying, is that coming in the next half hour? And will that take us to green levels on all these stocks? Then we'll go down to break even and then we'll go greener. Is this what is happening? Up 2 steps, down 1, up 2, down 1, up 2, down 1. Or is this the pattern now for hours? Is it 3 steps up and 2 back? What is the pattern? We never know. Keep an eye and we'll see what happens. Again, there you have it. Okay. I think we got to wrap this show up. Thank you guys for everything today. Thank you for those of you who have upgraded your subscription to Gold Bagel Level. It was a pleasure being with you last night for the Primetime Live show. I hope you received some valuable information there last night. We're up to 169, 170 thumbs ups now. Thank you for that. We've hit 176 results now on our question of the day. Thank you for that. Keep hitting that if you can. Thank you again for all your questions today and letting me know how you're doing and what trades are working for you and where you're at. I appreciate it. I want you to get nothing but richer. It's all we care about around here. And thank you again for all of your kind words and donations and those of you grabbing the classes and looking to do one-on-one sessions. But I'm happy to schedule something for you at your convenience. If we can find a common time to get together, let's do it. And let's get you down the highway and get you richer. Nothing personal, but we're just going to get you richer. And then you decide what to do with all that money. You figure it out. Thank you again, all of you. Richard Carlin, neat. Charlie, thanks again, Uncle Brace. Have a great day. Neat, Charlie. Same with Stuart and John T. Thanks for all you do, Uncle B. More than welcome, everybody. Love it. Keep going. Keep taking the money. Keep grabbing the cash. Earn interest. Get richer. Let the gamblers gamble. You be the casino. And take the bets. Absolutely. Take the wagers from the gamblers. They're the ones taking the shots. They're the ones risking everything. You're taking the percentage win. I love this game. Thank you all so much. Corinne, thank you again for being here. Appreciate you all. Have a lovely rest of your day. Jen and I will be keeping an eye on the markets from the sidelines. And we'll see you here for sure tomorrow morning for Friday, option expiry day tomorrow. But we'll keep an eye on the market all day long as well. Thank you all. I've got to go. Been on the air for almost 3 hours today. I gotta get a rest. Jen, are you ready to say goodbye? Sure. Oh, okay, she says sure. Okay, well, this is Bruce and Jen saying we'll see you tomorrow. Have a lovely rest of your day. Goodbye from Rancho Mirage in 3, 2, 1. Bye.